Mm. Good morning, fellow humans. Welcome back to another beautiful day in the stonk market. We're going to cover it all. Don't you worry. Don't you worry. I know everyone that's not watching right now, which is literally no one, is in sheer panic, but we will calm your nerves. Don't you worry. Everything will be just fine. So we'll wait, a few minutes for some beautiful humans to show up, and then we'll just kind of get rocking and rolling on all of it, as we normally do. For the moment, doesn't really look like there's been any amazing penny stocks this morning. There's been a couple. There's always a couple little things, but so far it's all been pretty janky. Very, very short-lived buy moves. Yeah, just not ideal. So, but it would be nice to see something halfway decent up here at some point. Yeah, that one. The old shakedown. Oh, it's not. Didn't even realize that. Good morning, beautiful people. Beautiful people, good morning. Yeah. I guess I will get started here relatively soon. Wait, which one is not too shabby. All right. Well, anyways, good morning. Where to start? I guess we start on the market. Yeah, so right now market's currently positive. Obviously, for those that were watching yesterday would already know this. So, we're in a small uptrend. Part of me feels like it's not going to really last extremely long, but we'll see. So we'll go full screen here. We'll look at the SPY. It's really the same thing as SPX, but you can look at either or. Yeah, so first things first, where's 50 SMA? Right there. All right, so we'll just review where the market broke out yesterday as it relates to this particular system. And our market essentially turned positive right when we got over the red line right there. That would be your 50 SMA. All right, that right there. So, if you were to take a step back, you can basically just look at the price action, right? Price act. Whoa, when did that change to red? That's different. That's weird. Hold on. Definitely don't like that. You can hardly see it. We're going to go back to yellow. That's weird. But yeah, so if you just look at the price action in general from past couple days to now, down, then yesterday, right there. That's where you get, I mean, if you want to draw your own trend line, sure, but that's where you cross over the 50 SMA, turn market back to arguably positive, and there you try to go up. So essentially, man, I should have just hit delete. Yeah, so ultimately, market is in a small uptrend. Same rules as before, which basically means we can continue Staying on the long side, I still have a position on to the long side right now on UPRO, 3x leverage ETF, 3 times the return of the S&P 500. So as long as the market goes up, I'll be happy. If it doesn't go up, I guess it's not the end of the world. But so yeah, I'm still swing long from yesterday. Hopefully things continue to go up. Hi Jenny, good morning to you. Sorry I didn't see that earlier. So yeah, I mean there's pretty much that. Yeah, so hopefully you guys have positions on long. That would be great. Well, I mean, I don't hope you have anything on long. I just hope you guys are enjoying yourselves and enjoying the market. So, yeah, we're just gonna keep rocking and rolling this puppy to the upside, hopefully. Yeah. You know, other things you can always just come down, look at the volatility index. So we'll bring that up right now. So, you know, we want to look at the volatility market and just make sure that yeah, we want to look at the volatility markets and just make sure that there is nothing that you know, would throw the market off the long. So what we're going to do is we're going to pop this into VIX. All right. And we'll do something like that. Close that out. Bring this up. Yeah, we won't put this to VVIX. Sorry. Also, I got a guy coming by here. Oh, I see why I turn these off. Yeah, that makes more sense. Yeah, not bad. Yeah, we just turn this to blue or something. I have a guy coming by to start working on some floors in the house, so at some point I might have to hop off, go say hi to him, and kind of get him all situated for the day. But yeah, just an FYI. Alright, let's get this all back the way it should be. One of those needs to be off. Alright, so yeah, let's get into it. Sorry, clearly just getting some stuff squared away this morning on the charts. Just kind of doing some stuff I think yesterday and kind of messed them all up a bit. Alright, so anyways, VVIX, or looking at the VIX here. If we look at the volatility index, we can see that pretty much there's currently no concern of the market being over the 50 SMA, so we're not in an uptrend for the VIX, so we're not looking for the VIX to knock the market off track right now. It could, but that's not really something we're looking for. First things first, if the VIX were to go up, it would have to get over the price of $16.59 there. And the 15-minute is downsided too. Alright, so pretty much the way we would look at that guy, let me just double check a couple other things. So that's the daily. And what about the weekly? Weekly was up there. What about the 4 hour? 4 hours just below. Okay. Yeah, so the way I would read this right now for the volatility market is we have the daily 50 SMA, it's right here. So this would be daily support, essentially, daily support. This would be your 1 hour breakdown / back test level. Yeah, so that's essentially how the volatility market is set up. So if the market is not going below daily VWAP, then the counter trend target would be back to the 1 hour breakdown. So the 1 hour markets on the VIX broke down yesterday, like here. This would be their first back test. That would be the move away. This would be the market continuing down. This would be the market doing whatever, right? If it's not going below the daily support level and it ends up getting held up and bouncing, then the most likely event would be the market going back to its most recent or previous level it broke down, which would be the 1 hour level. So we have on the volatility markets right now, the way they're set up is a market of the daily time frame and the 1 hour time frame. So those are the two algorithmic universal programmed price points on the volatility markets that computers can and do and are currently reading, right? If I was a program on a computer and you told me to look at the volatility markets today, one of the things that I could read universally, whether I was here in Michigan or in a different country on a different brokerage platform, I could see and read that there is a daily SMA calculation as it is on my chart, along with a 1 hour SMA calculation as it is on my chart, right? So either way, that's just another way of saying that computers can clearly read where we have daily levels and hourly levels, and basically the playing field is currently in between those two levels right now. So right now we wouldn't look to take the volatility markets any lower than the daily time frame or daily support for the time being, and we're not going to look to take the volatility market higher than the 1 hour time frame from now. Not that it can't go above or below, it's just those are the two areas of interest. Once above or below, then you might start opening the door for other things, but for the moment that's pretty much how things are set up on the volatility market. Now if we go and look at the VVIX, which would be hedging of volatility. Wait, did I just do that? Oh, wait. That's weird. But anyways, VVIX. Let's go here. VVIX, cool. Yeah, so now we're going to see if there's anything taking place here, which there isn't. We are below the 50 SMA here on the 30 minute. If we were to, I'll just stay here on this guy, sorry. So we're below on the 30 minute, and if we look at the 1 hour, we're below on the 1 hour. Definitely means we're below on the 15, which probably means we're right about the daily too, if things are universal, pretty close to, gotcha, all right. Back to 1, there's no pre-market, got it. Yeah, so pretty much the way the VVIX market is set up, it's very similar to the VIX market. Levels are about the same. So that pretty much just means that there is no one's really hedging for risk in the market right now, and there isn't really an expression of fear in the market today. So generally when that's the case, we're not given any sort of idea that the market would pull back because of the VIX or volatility. So essentially the volatility markets are not implying to us traders and investors and market participants that we should be fearful today in the market. So we should not be selling the markets today because of reasons of expression of fear or because volatility markets imply to do so. So again, there is nothing implying we should be selling the markets today based off of SMA calculations on the volatility markets. That can change, but for the moment it's not the case. What else? So if the markets are going to pull back, they're going to have to do it on their own accord. So somewhere in the market, equities would have to sell off, whether that be in tech, doesn't matter, right? So if volatility is not implying us to pull the market back, then the market would have to pull back for reasons outside of that, which then would normally be equities, right? So if on the day equities just all start to pull back, then sure, maybe the market pulls back then. Otherwise, we then generally continue to look up, right? So we have gone through the volatility markets. They're not expressing fear yet. So, to pull the markets back, generally what we would do is look into the open, see how the market internals are doing. If those aren't doing great, then we can pull things down. That might start to kickstart some degree of movement into the volatility markets. So, one other thing I do want to touch on with the volatility is this. And feel free to ask anytime. You can always stop me and ask a question if you need, because I know I covered quite a bit and what have you. But what am I doing? Oh yeah, the 1 hour. So something that I do want to mention, right? Because you just heard me pretty much express no reason to pull the markets down, or that volatility is not implying to do so. That's true. It's not implying to pull the market back because we're not above SMA calculations, right? That being said, it can still bounce for back tests, right? So when I go back into this pre-market chart here, right? So as we were talking about just a little bit ago, the two kind of, let me put it in a 5 minute, that'll look a little better. Yeah, basically the two levels of focus. Sorry, let me move this a bit. Yeah, so ultimately, as we mentioned, we're not over the 1 hour, we're not over the 30 minutes, so we're not really in an uptrend with volatility. If we were, then we could easily pull the market down, right? If volatility started to break out into an uptrend, that would be a signal from the volatility markets implying, hey, maybe don't be long, maybe look to pull the market back. We're not getting that signal, right? So that's not the sort of signal generation that's occurring today. So that's not, when you're talking strategy or you're talking edge, that's not the edge we're using right now. That could come, but it's not on the playing field right now. What's on the playing field right now, if we were discussing pulling the market down due to volatility, it would be the volatility market bouncing back to the 1 hour trend. So the signal wouldn't be like markets on the VIX are going into an uptrend, pull the market back. If we were to pull the markets back today and the VIX kind of goes up, to me, that would be more of a 1 hour trend back test play. So if we were to pull markets down due to that, okay, maybe, because again, that would be a back test of the 1 hour level. Now, which would also be like a bounce kind of around this daily support. Granted, it may not have touched. So essentially, if we're pulling markets down today, kind of going into the open and maybe through the morning, it's going to be more of a daily support bounce on the VIX to 1 hour back test trade. And for that to kind of all work, when the market opens, we will need to see some sort of selling being expressed in the market, which would generally be, which you could see by watching market internals, right? So like I was saying, we won't be looking to pull the market down today because of uptrend signal generation on the VIX or volatility. It will be because of kind of counter trend bouncing metrics on the VIX. And then the only way for that to truly work is we need to sell equities off at the open, which we could visually see through market internal analysis. I don't know if you want to call it that or whatever, but which we're going to do all here anyway. So that's what I kind of maybe see is the pullback reasoning for me today is going to be a 1 hour back test on the VIX to maybe some weakness in equities into the beginning of the morning. We'll see if that comes true. So yeah, just in general. And actually, maybe I should just like throw a line up to there. So yeah. So hopefully that all makes sense. And now we're gonna kind of go back to the SPY here. 1 second. I need to go to, because I want to kind of start looking at where and why, if we're going to pull the markets down, where we might be pulling them down to. So I'm going to look at our 30-minute volume, weighted average pricey Magoo. So let's go to the low here. Yeah, we're below. There's the, let me see, there's that. I mean, debatable, but okay. So there's this guy. That's still down there. 30-minute. That'll be there. That's gonna move, but I'm gonna change that to blue. Yeah, probably fine. That's also that. Okay, so pretty much the 1 hour back test. Let me double check a couple other things. 15. Let me look at a couple other things. Basically what I'm figuring out right now is exactly kind of the pullback levels, which in my mind I can already see a few. You know, we might pull back to the buy signal volume weighted average price, and so on and so forth. Well, that's interesting. Yeah, I mean, it just depends, right? It just kind of depends. Yeah, I just don't, I mean, I'm not the biggest fan of the way this is set up. I don't, in terms of long, I don't think we're going to get an amazing long to start the day. I think, if anything, we're going to get a lower high and down, but like I said, it's kind of one of those things where, again, we started the long. Let me just map this off from yesterday. All right, so actually, let me put this on a 5-minute here, so this all becomes pretty clear, right? So remember, we're swing long from yesterday starting here. So swing long from here. All right, so that's where we're swing long from. And our, hold on, I gotta change this real quick. Just gotta double check some things. 30-minute is down there. Okay, wow, it's not good. All right, and currently our support trend over under, 2 of which, which are right here and here. So basically we have pullback targets all the way down to 692.94, all the way to 693.98. You know, so the market, like I said, I'm not a huge fan of it. So I think we might be seeing a lackluster long. Again, especially if the volatility markets go for the 1 hour back test. Oh, that's fantastic. Love when that happens. So Yeah, if the volatility markets again go for the 1 hour back test, we're going to see we're going to probably see the markets pull back a little bit here today. So one other thing we're going to do, we're going to look at the volume weighted average price strategy of the pre-market high, and that's going to basically be our counter trend target and rolling resistance for the day. So right now, this price point, which will change and it will continuously update going into the open, that is our counter trend target right now. And why did that go back to red? That's super weird. I don't know how that even changed in the first place. Weird. Anyways. There we go. Okay. It's kind of big. So, that's a little better. Yeah, I mean, we're not going to cover every single aspect of every strategy, but this is our counter trend target for the moment. So let's just basically say markets don't just go straight down, which they probably won't. Then they would most likely counter trend target back to there. And then from here, if the markets stay down, okay. Otherwise, markets will continue into their buy signal. So the stop out, so if you will, the stop out of our swing long is down here right now. Pretty much, well, it's the same thing. It's actually support trend over under, and well, I guess it's really down here. So that's a better way of saying that. Oh. All right. So yeah, unfortunately, which not unfortunately, it's just how it normally goes. But well, not how it normally goes, but yeah. Remember, right? So if we look at where the SMA calculation is, which is right about here, that's the 50 SMA, right? So that's where we are swing long from yesterday, and you will see that. Just based off of how the market has previously traded, along with how the market traded yesterday, just in general, the SMA calculation has remained flat. So, again, our entry is from the SMA, and again, the trend changes bearish below. So, if we're above, we still have the hope that markets can trade up. And if we're below, then obviously that's not the case. So basically it just means that the entry point of the swing long is basically the stop out right now because the SMA calculation has remained flat. If it would have creeped up, our stop out would maybe be below that. But so basically for the moment, where we entered long yesterday is exactly where the stop out of the swing long is currently at. And then also remember that the market consistently trades to and from the SMA calculation, moving away, reverting back to the mean, breaking below, trading away, reverting back to the mean. So the same reasons that you get long the market are going to be the same reasons the market pulls back, right? Again, the strategy is all based around the SMA calculation. Long above, bearish below, revert back to, right? So at some point, the market will revert back to the SMA calculation. Therefore, whenever you are swing long, you would obviously hope that the market goes and goes up and goes up and goes up, and then your SMA calculation goes up. Therefore, if the trend were to turn bearish, it would turn bearish much higher than your original entry point. Again, it's just how the market is currently set up. It's set up with the flat SMA calculation. All right. So, anyways, that being said, everything you pretty much need to know for the moment, I would say. Maybe not everything, but a lot of it is on the screen. Where is yesterday's candle golden pocket? I mean, you can figure that out, But, you just measure the high and low yesterday, no GP there. Markets like to retrace golden pockets, And if you look, all this stuff here is pretty much all in that same area anyways. But yeah, that's something that is definitely big to pay attention to. I don't always look at that, but a lot of the stuff I look at ends up lining up with the golden pockets of previous days, or just a lot of stuff in general. Generally speaking, if you have good strategy or good edge, all the stuff kind of tends to line up a lot of times anyways. I guess most people are all, for the most part, kind of looking at the same. That's not entirely true, but somewhat. All right, so it's 9:26. I haven't heard the doorbell ring. I haven't heard a knock on the door yet, so we're still good. But at some point, I will be having to kind of hop off for a second and text. I will be there in 15 minutes, and that was 3 minutes ago, so you'll be here in 12 minutes. Oh. Oh boy. Excuse me. Alright, so I'm going to be moving this VIX chart all the way back up as that, and we're going to be popping that boy like that, and yeah. All right, are you guys ready for a beautiful day here? Don't blink for a second. You're gonna miss it. You're gonna miss it. What's silver doing right now? Silver up to 78. Gold, whoa. Coca-Cola. 10-year yield 4.2, 23.5. Actually, Netflix. Wait, where did I just click? Was it AVGO? AVGO kind of looks interesting. That's probably gonna go up. All right, 929. Shrink this down. Again, just to reiterate, we're not really bullish for the moment going into today's open. Well, kind of just in general, right? The pre-market and kind of moving into the open, just with the way the VIX is kind of set up and moving, just again, kind of looks like we're kind of on a little bit of a bounce. Now remember, it's all on the screen, right? We're swing long from here. We have where the stop out would be, and you even have pullback targets as low as where our stop out would be. Now, obviously, we're hoping that the market doesn't go down there, because obviously that would be better for the market. Currently, our short-term counter trend target right now, based off the pre-market action, would be back up into this green box right there. So, you know, basically, if the market does not just break down, then it's going to bounce. And if it bounces, we're most likely going up into that green box, as we said. And it's going to be at this price point that anyone who's been playing short from today's pre-market session will have to decide if they want to keep selling the market or if they're going to squeeze themselves out. If they squeeze themselves out, arguably, once we start getting over the volume weighted average price that's been created from the pre-market sell-off, that's where we'll start to get a little bit more momentum on the day back to the upside. So what I kind of would categorize what you're seeing right now, all right, basically target hit right there. That's how you predict the largest globally traded stock market. So that right there is generally what I kind of consider is just, you know, we've had this pullback that's been taking place throughout the pre-market session. And, you know, things don't go in a straight line. So a lot of times what we will do is into the open, we will push the market the opposite direction that it's kind of just recently been going, and a lot of times screw over anyone who's been playing short, right? So now what we've done is we've essentially bounced today's stock market back to a key volume weighted average price that's been created from the pre-market session. Let me zoom in for you guys. And now it's the seller's decision if we want to top the market and lower high here and really roll it down. And if not, then obviously eventually we'll get back over that, right? So that was the start point of the potential lower high and roll down, right? And now the battle is going to take place here, right? So, and when I say battle, it's going to be whether there's buyers willing to step in and prevent the lower high breakdown, or if the sellers are going to win this one out, right? So that's how we're kind of mapping off the short-term price action of your largest globally traded stock market. All right, so that's that. So you can kind of see how we've popped the market up into the said target. We've now pulled it down. So far I would say the market is moving pretty much perfect. And yeah, that's pretty much that. Actually, a couple other things I should probably just take a peek at too, just in case. It's always good when you see a position that was red starting to go green. It's always a nice feeling. All right, so we've essentially pulled back to the first target, and that would be the 10 SMA there. The next target down would arguably be debatable. I don't really want to use that one as a target. Yeah, move some of this stuff. Needs to be, oh, that's the 1 hour. Actually needs to go down. This needs to go up. Like so. There's the 1 hour. Shoot, 1 hour 50 hasn't even been tested. What about the 5? 5's under. So 5's down. Can't use that. 15's still up. Alright. But yeah, so anyway, so that's that. Now the only thing I can really think of is obviously there's been a decent amount of selling off the high there. So pretty much now what we're gonna want to do is track the high. So we're gonna take a volume weighted average price, attach it to the high. The rejection of the high will anchor that down, and pretty much as long as the market is below that 1 minute volume weighted average price, then the sellers on the day currently have control of today's market action. So yeah, pretty much what that does is it now makes that a counter trend target and a potential 1 minute rolling resistance level. So that now becomes a 1 minute counter long scalp target algorithmic level, whatever you want to call it, right? Anyways, the guy should be here pretty soon. Let's see. All right, real quick, let's take a look at the market internals now that the market is open. So S&P issues are going up. NYSE issues pretty much going up. Magnificent Seven are the reason we've pulled the market back a little bit. It's a little flat. So pretty much again, it's the same story as always. It's pretty much going to come down to these Magnificent Seven tickers. If they hold up and don't break down, markets aren't going to sell too much more. If they end up rolling out, getting weakness, then we're going to keep taking the market down. There's the 1 minute counter push back to the volume weighted average price. Now, this is kind of one of those scenarios where everyone that hopped in short at the high is just hoping that you don't go above that. Because again, this is where the 1 minute lower high needs to take place to keep rolling the market. If you start to get above that, then we'll basically squeeze the market back to the current day's high. Welcome, people. Welcome. I hope we're all having fun mapping off the largest globally traded stock market / ETF in the world. It's quite a beautiful thing, is it not? So much fun. Holy smokes. What? Who would have thought? I mean, absolutely. Who would have magooed it? All right, so that would be a slight breakthrough. I mean, I'm not going to bore you guys to death with every single possible thing on planet Earth, but so look at this, right? So see how the market, let me real quick, see how we're kind of going down, right? So obviously you can see that, right? Market's going down just as we've drawn it, just as we discussed pretty much the majority of this morning. And now, if you look at the actual market internals, what's actually more impressive is the market internals aren't really going down all that much, right? So as we said before, it's the volatility markets that are actually doing it, right? So if you bring up, remember we talked about, you have the daily support, you have the 1 hour breakdown, back test level, right? So it's essentially the bounce and kind of the activity that's going on in the VIX that's clearly allowing us to pull the market down. And it's not as much of what's going on in the market internals. Now, the market internals could change and all this can change, but just your quick snapshot, you would basically say, for the moment, it's the activity that's taking place on the volatility markets that would be allowing us to pull the market back, because we're not really getting a lot of selling activity across the New York Stock Exchange, the S&P issues, and Magnificent Seven, and the NASDAQ for the moment. There's a little bit of selling in the NASDAQ, a little bit of selling in the Magnificent Seven, but nothing dramatic, So really it's just, a lot of it's the volatility index market, right? And this is what we try to explain today is there's if we're going to pull the market back, it's not an uptrend breakout signal from the VIX. It's a bounce sort of move on the VIX, right? Usually it would be accompanied by more selling on some of these issues. So that's why I'm kind of a little bit impressed or scratching my head. So there's my dog and there's the guy. So I will be back. Don't know how long. Probably like 10 minutes or so, 15 minutes. But cheers. All right, we're back online here. So yeah. Anyways, huh. Interesting. Yeah. Cool. Let's get this out of the way. All right. So market is yeah, just staying down. No big deal. Obviously, you can see the volatility market has gone up to our said target. It's just because that's just pretty much how computers work, right? So it's not really just like, it's not the strat. That's just how computers read markets, right? So the long on the volatility market is complete to the 1 hour. So this is where we arguably see the market bounce a bit if we, as you see, are rejecting the 1 hour. So we should be seeing the markets bounce. You can see how if I pull that back, they're starting to bounce. And that's arguably because right now in real time, the computers of the markets are rejecting the 1 hour trend. So as it relates to short-term market trading, trying to make money, if you will, that 1 hour level in rejection so far is enough to dramatically throw an intraday bounce, which people are making money on, right? So just in general, right? So just a 1 hour long target completion, 1 hour pullback is resulting in the bounce on the market here. There's a good chance the bounce on the market goes up pretty much to our the volume weighted average price of the day. It's like right about there, arguably. Okay, so hopefully this is all making sense. Yeah, it's pretty much that, right? So, man, that's beautiful to be able to pretty much map off in the pre-market, where the market on the volatility. That's another thing too, yeah, whatever. But yeah, so nice move on the markets today. We have accurately forecasted where the volatility markets would trade to, how that would negatively affect the price action of today's stock market. Now why we're bouncing, because we are rejecting the 1 hour level. So if I were to change this to the actual 1 hour chart so you can see what it really looks like, all it's going to look like is the price of the volatility market went up to an SMA and then it's just having resistance, right? So if I change this to a 1 hour and, I'll just delete everything because we don't need it at this point. Clear drawing set. All right, what's it look like? That's what it looks like. All right. So all of that fancy lines and this and that on the chart, that was just me trying to better teach, right? Really, it's all there for you. It's just this. That's all it was this, literally this SMA on the 1 hour, right? And just reading the market, right? If I went through all the time frames, the 30-minute SMA calculation, it's all the way up here. So we could do that, but first we'd have to go through the 1 hour, right? Now I could change this to a 4 hour, and the 4 hour SMA is below us right there. So clearly that would be more like support. All right, and if I go look at the daily, the daily is where we bounced the market yesterday. So clearly there's algorithms reading the VIX market off the daily, right? So just all in all, when you go through all the time frames, you'd end up, coming to the conclusion that the two closest SMA calculations, or if you want to call them algorithmic calculations, would be the daily, which is down here, and it would be the 1 hour, which is up here. Now, of course, I could look at like a 1 minute, right? A 1 minute's right here, all right? Now, I could look at a 5 minute as well. We could do that. We could look at a 5 minute, and the 5 minutes up here, and you could look at a 2 minute, and you can look at a 3 minute, but just in general, right? If we just, all those time frames, right? The closest would be either the 5 minute in the daily on the down, or it'd be the 1 minute in the 30 on the top. So the algorithms and the computers are going to move the market to the averages. So which average are they going to go to? And that's pretty much what you're trying to figure out. So yeah, that's that. So anyways, that's how we've accurately forecasted the volatility markets today. Excuse me. And yeah, so we've now pulled the market back. We've pulled it back. Yeah. Actually, what we should do is we should check VVIX too. All right, VVIX is not broken out. Yeah, the VVIX isn't broken out or anything like that, so no one's really hedging downside risk. So, it's not like we can really read the VVIX market and think that this is just some dramatic pullback because, again, there's no signal in the markets for that yet. Though the market's pulled back and it might look scary and it might progress to something more, currently the volatility markets don't suggest that. Now, of course, the market can kind of always do whatever it wants, if you will. And that's true to some degree. But at the end of the day, there isn't really an expression of fear in the markets yet. So that would still generally mean markets are kind of okay. If the markets keep progressing, then what we will see is some expression of fear. So like we said before, how we're talking about the markets just bouncing because we're doing the 1 hour VIX rejection, right? Well, if we start to get above the 1 hour trend on the VIX, then that means then the 1 hour would actually be going positive, right? So that's the next catalyst for kind of more market drop, if you will, is if, say, later today or into tomorrow, just in general, we start to get back above the 1 hour. That could be a signal, that could be a VIX signal to us to be more bearish the market, right? It's not quite activated yet, but it could be. So we're still just sitting waiting on that, right? So the only way we would really assume the markets actually go down in this moment in time is there has to be some degree of selling taking place in the market, right? So we can see on the day we're having underperformance in the Magnificent Seven, and I can just see that. I can just say that because this is a combined ticker. So just looking at the handful of biggest stocks, right, biggest market cap, we can see that those are in a downtrend for the day. So those are negatively impacting the direction of today's market. So those are helping it go down, though the selling doesn't look extreme here. There might be some selling that I'm just not. Well, clearly there's some selling. You know what I mean? Like sometimes you just look at a chart and you go, oh, it doesn't look that bad, but sometimes it is. So anyways, right, we're not getting total long bias performance from equities today. We're kind of getting somewhat downsided equities because the Magnificent Seven, right? So there's your market extending its move to the downside. Again, remember, when we look at the markets, we don't have equities going extremely long bias. Remember that, you can see some of the NASDAQ is up and you can see the S&P issues are up and the market's still going down. So this is a good reminder to you and anyone who watches Market Breadth and things like what were market internals, that you can get sort of confusing readings if you were to think that markets are linear or everything is equal. It's not, right? So a lot of times the market is controlled only by a handful of stocks, especially in this day and age. So using a combined ticker like we have here on the stream can do a really good job at helping you understand why the market is going down, even though a lot of other equities are going up, right? Because if you were to look at just this overall snapshot, you have 1, 2, 3 different charts, 4 different charts all going up, but the market's going down. But you also have just one of those charts, which is the Magnificent Seven, that are kind of going down, right? So nonetheless, if we kind of zoom out here, you're pretty much going to see that the market is now pulled back to pretty much as we originally had on the chart this morning, right? So when you woke up this morning, you came to this free stream on YouTube and you looked at this beautiful face, and I was just kind of here drawing a bunch of random pictures on the chart. Now you've got to see them all come to fruition live. So that's fun, right? So we've essentially taken the largest globally traded stock market in the world down to the pullback targets. Now, the reason we've done that is because, well, clearly the market wanted to do it, but because those were totally reasonable things for the market to do, right? So yeah, markets are pulling down. Is it, it's to be expected, right? It's not like we woke up today and this wasn't to be expected, right? All of these things were mapped off ahead of time. So, what's to come next? Ooh, who knows? Maybe we do know. Who knows? We don't know. So what's to come next? What's to come next is, well, you got to read the VIX, you watch the market, and pretty much probably what's to come next is the market's probably just going to keep selling down into our set targets, as you're seeing. Now, for example, if you were to think about, think about where our swing long entry would be and then where our stop out is, right? And you see how the market's pretty much going down to that stop out. That's because it's an algorithm level, right? It's an algo. Like, that's how algorithms read the market. We see the market is in an uptrend from here, and as long as it's above there, it can still be in an uptrend, right? Whereas the way I used to think, and the way that 95% of all traders think, is they think in terms of horizontal price points, right? So most investors and traders will look at the market and they would go, the market bounced here, so that's support and that will be my stop out. The market bounced here, so that is support and that will be my stop out. The market bounced here, so that is support, and that's my stop out. The market bounced here, so that's my support, and that's my stop out. And those have all gotten wrecked. Not that they couldn't have bounced, and just in general, right? And our stop out is all the way down here. And the reason it's all the way down there is because we know that the market goes from uptrends to downtrends. And there's basically 2 or 4 modes that the market trades in, and well, there's really 2, right? And again, the way it pretty much works is it goes into an uptrend, goes up, and eventually pulls back to the mean, then goes into a downtrend. So what we're seeing is a stock that went into an uptrend yesterday, or the market go into an uptrend, last till basically today, and now we're pulling it back and reverting it to the mean. And as a result, anyone who has horizontal price points sideways all get knocked out as we take the market and the algorithms back to a mean reversion. Okay? Now, we have the hope that the market hits the 50 SMA and stays positive. We'll see. I can't say I'm the most optimistic. But one thing is for certain, we should not be looking bearish down here for the moment, because this would be kind of a first attempt into potential support. So now let's go look at the S&P 500 on the 30-minute time frame so you can literally see what we're talking about, right? So if we go to SPX and we go to the 30-minute time frame and I zoom in, where is the market? And you can, sorry if it gets a little loud, the guy's working downstairs, but this is good stuff, right? Oh, the market is back at the 50 SMA. You see that right there? That's the 50 SMA. Remember what we said? Hey guys, market. So that's a mean reversion, right? The markets do literally, this is all they do. They go above the SMA, they move away. Eventually they get weakness, pull back, they go to the SMA. If the market doesn't stay in an uptrend, then it enters a neutral to bearish state until the process repeats again. Okay? So this also goes in line with what we talked about earlier. Remember, we were talking about how being long at the SMA gives you the lowest risk in the sense that when the market wants to go to a downtrend, it has to first go all the way to the SMA, then decide. Right? Whereas everyone up here is get knocked out regardless. Right? So if you were to go back and look at like the last buy move, right? If we look at the last buy move, right? Think about it. Your entry would be somewhere here if you were in the pre-market and got it, and then your stop out would be there because the market trended up, gave time for the SMA calculation to move higher. What we just had yesterday and into today is we had a move that was up, and just one day afterwards we're back down. Not enough time for the SMA calculation to move higher. So essentially the entry becomes the same as the stop out. Okay? And when we say stop out, like right there, if you were swing long with me from yesterday, you don't have to stop out right away because it's, literally this is, look at the market, right? The market's been going straight down, right? It might not just keep going. So it might have to bounce and it might go, I'm saying so it's just one candle below, you don't have to panic and things like that. I'm not concerned about it because I know the market will go into an uptrend, whether it be tomorrow or 4 days from now or 5 days from now, So, you guys tell me in the chat if this starts to if the noise gets too bad or if it's, disrupting the stream in a way that makes it annoying. And if so, then I will just log off and we'll stream, who knows, because we'll be here the next couple days. But if it's too bad, just let me know and then maybe we'll end the stream or something like that. So what we need to do with this, so we see how this whole sell-off is going on, right? Like the next thing would be, oh yeah, the VIX went crazy. All right, so the VIX broke all the way up in the 30s. That's fine. So, sorry, let me bring this up like this. Yeah, so with the breakdown there, hold on, I gotta read. I think we're doing a 30-minute. We could be doing a 30-minute rejection. So 1 second. Sorry, brain fart. 30 minutes. Yeah. All right. So what you see now, right? So think about it. This again, just because the market is selling off and it looks scary, the volatility market. Look at the volatility market. The volatility market is not yet established above the 30-minute. So this is still just a 30-minute breakdown on the VIX, right? So this would be a breakdown on the VIX's 30-minute, and this is a back test, right? We're not yet above, so the VIX still runs the risk of being in a downtrend and rejecting and staying down. If it does, ultimately, we're just going to see the market bounce then, even after the entire sell-off. Now, I'm not the biggest fan of the way this all looks. As you guys know, this morning, we pretty much said we're probably going to be pulling the market back, but either way. What we're pretty much doing now is we're pretty much playing a game of that's weird. Where's my SMA? There. That's weird. Okay, there it is. So we're pretty much playing a game of, is the market going to hold support or not? Is it going to hold support or not, right? Like that's pretty much what's going on right now. The other thing too, which is good to mention, is the 1 hour, right? Oh, I didn't even notice that. We're right on the 1 hour. That's not ideal. That makes this a little bit more risky. So you can actually see, since we have the 1 hour and the 30, so this is a 1 hour and a 30 breakdown, and that's a 1 hour and a 30 back test. So right now the markets are getting they're right on edge. Again, it's kind of one of those things where we're right at the start of a potential breakdown or a bounce. So again, like right now in real time, algorithms are talking. I don't like the way it looks for a bounce in the moment. Maybe it shapes up later. But markets are kind of at a very sketchy spot right now. The markets are teetering on edge, if you will, because of all the reasons we've already described, right? The market is right on the level that can dictate the market starting to go into a neutral to bearish state. While at the same time, we have the volatility index, which is right at the 30-minute. So the volatility index is right at the level that could start an uptrend, right? So you have the S&P at a potential breakdown. You have the VIX at a potential breakout, right? What happens if the VIX breaks out? Market goes down. What happens if the market breaks down? Market goes down. So we're at a big inflection point in the market. Now, the average retail investor would basically never even have a clue of how the market is currently set up, right? They might see it going down and think it looks bad and all these things are bad, but you know, we're at a true inflection point for the market. So it'll be interesting to see how this all unfolds. And when I say that, I mean, you know, it'll be interesting to see if the sell-off continues, right? If the VIX breaks out and markets end up breaking down. So let's bring that back up real quick. All right, so we're effectively broken down now on the market. When I say that, I mean we're now below the SMA calculation. So I am stopping out. We're neutral. Now we're in a neutral to bearish state on the market. I will go back long the market when the market reestablishes what I think is an uptrend. That could happen in 10 minutes, an hour, 2 days, 3 weeks, a month, don't know, right? But when that happens, I'll go back long, all right? So whether it be 10, 20, 30 minutes, 40 minutes, doesn't matter, right? So now what we're going to do is, we're just pretty much going to use some of these little tactics. So I might have got stopped out on my shares there, but that's fine. I'm more of the rather not risk it kind of guy at this point in time. So, so yeah, I mean, pretty much like as just said, that's all we're doing. We're just waiting now for the markets to establish themselves, all right? If the markets start to recover, then maybe we go into a bounce, right? If the next couple days we break down, markets are going to be down, right? So yeah, I mean, that's pretty much that. Let's take a look at the Russell 2000. I'm kind of curious what this is doing here. RUT is into an uptrend, so one would hope that the penny stock market kind of picks up a little bit. So now the low would be to the 4-hour 50 SMA if we continue. Let me see. What are you talking about? Probably since by. Oh, that's a wrong chart. Yeah, that would arguably be an SMA that you could watch for the market to move down to 689.85. Yep. me take a look at something else here too. Trading, so we're down to style. Okay. Yeah, market probably has to move down a little bit further there. 691.77 as well. Yeah, I mean, you know, what do we just say? Yeah, the 4 hour is down to like 690 or something like that, I think. Yeah, that would be a level you'd be watching down to, maybe the 3 hour, etc. Whatever SMA is down below. That's a way of looking for targets. That's one of. Yep. So yeah, just be careful out there, folks, because the market is now below the SMA calculations, both the 30-minute and the 1 hour. That's generally a little sketchy. So the market should move to that blue line on my chart there too, obviously, as you guys can see. It's not like it was super far away. It's like 1-2 candles down, but yeah. Wait. Oh, that makes more sense. Yeah, that would be nice if they would allow us to share some charts in the chat. I mean, you can share them on the Discord, you know. I think I've made that room. Yeah, I made the trading room in the Discord free or whatever open, so you can share it there. SLV up 9% today. Would you look at that? What's Bitcoin doing, actually? Oh no, Bitcoin down again? Who would have thought? QQQ lost all of yesterday's gains. Yeah. I mean, Not really surprised, honestly. Actually, I think I forgot to look at QQQ because you know what? Something that would have helped us earlier this morning that I forgot about was QQQ. Remember how yesterday we talked about QQQ being at the 50 SMA and blah, 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 blah. So we would have been able to basically say to ourselves that the QQQ re-entered a downtrend or kind of a false breakout way earlier today, this morning, up at the price here. So pretty much right into the morning, we could have read that the QQQ was failing its uptrend and going into a breakdown, and that would have actually helped us be a little bit more aggressive on the bearish idea today. So that was, basically, my fault, failure to watch multiple markets and be fully prepared, but whatever. Still knew where it was going essentially, but yeah, that would have helped a little bit, seeing the breakdown there first, or being more prepared, if you will. So yeah, markets are just kind of bearish right now. QQQ's down, SPY's down. There's really no reason to be extremely long bias right now. So yeah, who's gonna save Sailor strategy? I will be the one to save Sailor. I know it sounds crazy, just some random dude in his sweatpants in his home office, but it's true. We here will save Sailor. You just got to let us get Bitcoin to the current sell target. So the current sell targets for Bitcoin are as follows. Pretty much the boxes on the downside. Excuse me. All right, so those green boxes on the downside are the current downside destinations for the Bitcoin market. Those were the current downside destinations for the Bitcoin market when the market was here in October. I know, but it's true. In October of 2025, we posted to YouTube saying the bear market has started. I'm not going to type that out. But anyways, in October of 2025, yeah, something like that, a YouTube short posted, not only YouTube short, but mentioned on multiple live streams, in chat rooms, and just in general, pretty much to anyone in the public that was willing to, listen and follow along. We pretty much mentioned bear market would start in October of 2025, and then we would expect that bear market is going to go down to the price of pretty much like 50K, give or take, right? And then the worst case scenario is that it goes all the way down to like the 40s to 35s, because that is where all of the Bitcoin and crypto legislation started taking place, like crypto bills and whatever kind of started getting passed or whatever. That all kind of took place throughout this portion of the market. So so those are the current downside destinations for the Bitcoin bear market. So anyone buying now is, in lump sums will probably see their positions go red. So yeah, everything that's happening I think makes perfect sense. I think it's to be expected. So far, the analysis, and remember too, right? All of this Bitcoin topping here and pulling back to here. I mean, this entire analysis and all this stuff you guys are seeing, this was all put forth during the bull market run, right? So when the market was going up, where I'm drawing here, we were planning for the top here and the pullback all the way to here. So everything that you're seeing drawn on the chart, this forecast has been put forth years ahead of time already. So it's not like, we're looking at this 50K to 35K drop on Bitcoin because the market is all of a sudden going down. This forecast and this analysis was put forth years ago. And so far, it's pretty much happened almost perfectly, which is the more scary part. So I'm assuming I'll probably have to be wrong sooner than later, right? Can't be that good too many times in a row, right? So I'll probably be wrong sooner than later, but yeah, so far it's all going to plan. This is forecast from like years ago. So yeah, I'm really hoping we just kind of sell down to the 50Ks, 40, 30Ks, and then we'll hit a nice tradable bottom down there. I don't know, maybe we'll pick up some IBIT. Maybe we'll sell MSTR puts, go long calls, Texas Barrett. I mean, there's so many different options. But yeah, so. But yeah, I'm assuming we'll probably go into some IBIT. We'll go into some MSTR. We'll probably pick up some crypto plays. Add to Bitcoin. Giggle at the internet because everyone will be panicking and pissed off, and and then we'll be buying. So I'm assuming that's probably how this is going to go. And if it doesn't, then I guess I'm about to lose a bunch of money. So that would suck. Whatever. Anyways, cheers. How about Tom Lee? I mean, I've seen some stuff recently, just kind of some clips here and there about him, and maybe some articles about him buying up Ethereum and things of that nature. So, but BMNR, I don't actually think I've ever heard of that. Is that? Yeah, I'm not really. What is this? It'd be Bitmine Immersion Technology. So is this a mining company? And I'm assuming it's a mining company, and somehow they invested in them. I don't know anything about this personally, but yeah, don't know. So, any hooser, we will hopefully be here for the moment Bitcoin sells off, and then, we also, I don't know if I mentioned, but right now our current long target for Bitcoin is about 100,000. So once, and I'm going to say once because whatever, once Bitcoin goes down to our sell targets, and then once it actually bottoms, the current target's about 100,000. But if we sell down to 50,000-ish, give or take, then the target will probably be 95,000. So no matter how you spin it, and if we sell the market down to say like 40s or 35s, which would be pretty wild, then the target will probably be like 80, 70 something. So no matter which way you spin it, the long target for Bitcoin, I think, provides about 100% return to the first long target once the bear market is completed. It's going to provide, yeah. It just depends, but right now the first long target destinations for Bitcoin once the bear market's complete, I have about 100% return. Obviously that can change a bit, but I would say that's probably a safe assumption of the expected returns of the next first rally of our future bull market, if there is to be one. I see. Yeah, so that's what that is. Okay, gotcha. Yeah, also, guys, so I don't know if, I know we've been talking about Bitcoin, but I'm pretty sure the 6 of you guys here are pretty up to speed that, again, the market is not bullish because we broke down. So we're in a neutral meaning definitely not long, right? Bearish meaning you could be aggressive and try to short it if you want. But we know that we're not currently in an uptrend, so to expect anything other than counter trend bounces right now would be illogical, right? So we are, again, not long biased the market for the moment in the short term, all right? The market has now gone on sale a little bit. So if you assume that the markets aren't going to go into a drastic sell-off or market correction, you would be buying this dip for your long-term portfolio. Could it go lower? Sure. Will it go lower? Maybe. What is for certain? It's more on sale right now than it was yesterday. And it's more on sale now that it's not in an uptrend than it will be than when it goes into an uptrend. What you're seeing right now is the back test of the breakdown, pretty much, kind of, right? Where did the market break down? on the 30-minute below the blue. So as long as it's below the blue, we're not going to see easy uptrend motion on the market. But if it does go into an uptrend, then great. You can, go back long if you want, Let's see how these guys are going. Whoo, baby. That's what I like to see. DIVO. Absolute pumper magoo. Look at that. Shit. Love it. The reason I like seeing that is because, as I had mentioned, I had moved quite a bit of capital to DIVO. I have positioned myself for the future as a little bit more defensive. And one of the plays I picked up was DIVO. And so currently this play is outpacing the market, so that's why I'm a little happy right now, is that currently, and it may not last, and I could very well be wrong, but for the moment I'm right, and I get to celebrate that, so that's a good feeling. So currently my thought process and where I currently have moved money in quite a bit is, so far, I'm being rewarded for being correct, and that feels really good. And that is that I moved money a little bit more defensive as of recently. Well, I mean, I was already defensive being in gold and silver, but taking some of that profit and moving it here, which is more of a dividend payout, and it's market appreciation, but it's basically an ETF that looks to cap some downside risk by selling covered calls on some large cap value stocks that pay good dividends, right? So it's kind of an income generating downside capped risk ETF if you foresee potential underperformance in equities or lower growth in equities. So that's how I've moved some money recently. So to see this being up more than the market, is a good sign that so far what my thoughts are correct. All right. Now that I could be proven, this could be proven incorrect very soon. So again, it's like can't get too excited, but it's good to see that, right? And if you look at the overall history of this guy, I mean, it performs similar to the market because it's an ETF that has large cap stocks within it. So to a degree, right, it moves similar to that of the S&P 500, but it focuses on dividend income and then also focuses on selling, covered calls to generate some more income. And since I think the markets might be a little lackluster for the foreseeable future, this could arguably have better performance than the market. And if I'm wrong, I won't have much underperformance either. So it's kind of like, to me, it might be like almost a win-win in the sense that I could arguably keep up with the market almost if I'm wrong, but if I'm right, then obviously I beat it. So there's not really too much of a loss there, if you will. But anyways, so that's that, I guess. Let's see how the international markets are doing. Well, they're doing all right. Well, they're doing better than our markets today. So that's good because again, that's another play I've picked up on a little bit more recently. A little more diversified into some different international plays. So again, like seeing the international markets up, beating our markets today. That's always a good feeling because again, it's on position. So that's a bonus. SLV up. Also, I don't know if you guys, I mean, obviously you guys know, I told you that I had been liquidating some gold and silver on the moves up and liquidating into the 90s, the 100s, because I expected that to be a top. I'm not sure if this is going to be a local top that eventually breaks out in the future within a shorter period of time, or if this is going to be more of a longer term top. Since I really don't have a clue, but I knew that we would top, I've still sold some. And I still own some. And I'm probably going to be taking off a little bit more silver. I'm still going to own, right? I'm not going to get rid of fully, but I am going to deleverage a little bit more. I have already deleveraged some today on silver on this gap up and as the markets bounce here. Assuming that this could be a lower high, I'm closing out a little more into this bounce, assuming we'll eventually roll over. And if we don't, well, I guess I'm wrong and whatever, right? But yep, so that's kind of how I've been allocating and moving money as of the recent. So if you guys are interested or want to follow along and watch me lose money, then feel free. Again, as we mentioned before, we are not long biased the stock market right now. There is no need to be long biased the stock market. Oh, guys, this is going to be funny. So you remember yesterday how I mentioned if the market stays up, we'll probably see the news kind of flip and maybe start pressing some positive articles. Well, let's just see if they did. And the reason I say this is funny is because you could have one day, just like yesterday, where a market has, relatively good performance. And then you have a bunch of news articles come out saying like, oh, stocks are great, or Trump said this about Greenland and the market's fine, right? And then the next day, the entire market gets smoked. And then those same articles are coming out like, oh, maybe Trump said that, So literally within a day's time, the market could go up and then go down, right? And it completely invalidates everything the news was trying to tell you less than 24 hours ago. So that's what I always find is very comical at times too, right? And that's because, as we mentioned before, the market really at the end of the day, it just goes into uptrends and it goes into downtrends and it reverts back to the mean. And it pretty much does that ongoing forever until the day we all die. And when you know that the market can do things like it did today, which is or the past 2 days, where it goes into an uptrend and the uptrend does not last long, and then we just revert back to the mean. So being able to read that today, we said, oh, well, markets can pull back to here, right? So by, being in the markets, you can read that potential setup. Writing articles, you can never see that coming, right? So you're always going to be late with news, which you guys all know that, but it is kind of funny. So again, right now, we're just simply seeing a back test of the SMA calculation, right? So you can see how the market has popped up and we've back tested. Something else that's probably important to follow is the breakdown on the NASDAQ. So what we should do is we should anchor, and I should have already done this, but whatever. We should anchor a 1 minute volume weighted average price specifically to the breakdown of the NASDAQ, and then that way we can track at least the intraday 1 minute selling volume trend. And the reality is as long as the market is below this, there's absolutely no chance the market puts in like some serious rally, I would imagine. So pretty much all we're gonna do is just pretty much we'll do two. We're gonna do we'll do a high, and then we'll do an open high low close. We'll double it up. So pretty much there we go. So we know that the market broke down on the NASDAQ here. That was literally the breakdown of the 50 SMA. So we have a tech 50 SMA breakdown, market structure change, etc., right? And then now we also know that these here would be, or that there would be the, whoa, hello, everyone just chill out. Everyone just chill out. All right. These are going to be the 1 minute, 1 minute VWAP trend of said tech breakdown market structure. Did I spell it right? I did not. Structure. Except, that's a lot. All right. So essentially and again, you can see that's another trade that we look for on the short term. So, the more you guys follow the stream, the more you'll see the strategy, and then the more you'll be able to pretty much trade the same exact thing and pretty much know where the markets are moving and why and all these good things. But, then from there, as long as you master your emotion and master your risk, you'll do okay, That's always something over the years I kind of struggle with, is kind of like the more emotional and psychological aspect of trading. As you can see, I have a very analytical brain, and sometimes that can lead to a little overthinking. I'm also very ADD. So what I've come to find too is actually I end up having better performance on my portfolios the less hyper-focused I am. So it's kind of one of those like double-edged swords. You know, you can learn a lot by being hyper-focused, but usually my trading doesn't do well with hyper-focus. It actually does better with distraction almost, right? When I have a little play on here, maybe a little something here, I might dabble in a penny stock here, maybe I'll take a future trade here. So the less hyper-focused I am on one thing, the better I tend to end up having in terms of performance. But anyways, that being said, what was I saying? Oh yeah, so that's the breakdown. And again, NASDAQ's down, SPY's down. The volatility markets, if I bring those back up, the volatility markets are a little broken out. So let's turn this to VIX, VIX. Yeah, you can see again, volatility markets are up. Are they over the 30-minute close? Whoa, wait, what? How is that even possible? Am I missing something? Oh, they're right on it. That was hard to see, yeah. So again, volatility markets for the VIX are right at the 30-minute. So we're still in this like spot where the VIX is trying to decide if it, because again, this is what's going to happen. The VIX needs to break out for the continued downside selling pressure to like maintain. If this turns into a top at the 30-minute, then again, the market turns into a bounce. Or the market will have a little bit of a bounce down here. You know. How is Ethereum doing these days? Oh, I don't have it saved. Ethereum. US dollar. ETED. Well, looking a little rough is what it's looking. But maybe one day she's gonna come back for us. What about old XRP? Yeah, I mean, you know, you can already see here too with like XRP. XRP failed its last like pretty much breakout long, right? So you can kind of see support, hold, support, hold, support, hold, rally up, roll over, getting weakened down, right? And so you've pretty much lost like this old support trend. And then you also pretty much have a bunch of resistance coming down. So if you're just to take a volume weighted average price, throw it on the top, you know, you can see that we're, it's just in a downtrend, right? So, you know, until the market is above here, right? I mean, and all of this, it's just down, right? So realistically, you know, one would pretty much say until XRP is above pretty much like any of this, you're not going to see a serious rally with it, you know, because all of this is still in theory just resistance, right? I mean, if you look at the structure of the market too, right? I mean, if you think about it, I mean, this would be up, right? So we create a huge move up, and then the market pulls back to the volume weighted average price, but then we create support and a bounce, which then goes up. Then Bitcoin goes into a bear market, which then causes the price of this market to go down. We have not really tested much of this weekly stuff. If we did, then you create a head and shoulders, etc. But yeah, anyway, so a lot of the Bitcoin, just the crypto market's it's just in a bear market. That's pretty much it. It's pretty much it. Okay. Has anyone texted me? Is anything happening? No. I am not important today, which is nice because it feels like my phone has been nonstop ringing for just months now. Oh, wait, what? Oh, snap. Man, we have just a super duper busy live stream here. We are just beyond busy, folks. We cannot keep up with demand of the chat. We just don't know what to do. We got no clues. We don't know what's to do. We don't know what to do. Nah, just kidding. The gains. What time is it? 10:43? Oh my goodness. It's just been such a long day. I mean, how are we ever going to keep predicting the markets? I just don't know. The markets are down. The markets are down. Right? And so, like, if we delete all that off, right, and then you look, you're like, it becomes pretty obvious, does it not? Ready? Like, look at the QQQ. Ready? Market below, down, market above, up, market below, down. That's literally it. All right, market below, down, market above, up. Market below, hardly down, market back above, up, market below, down, market above, up. Holy shnikes. Yeah, but we'll just kind of keep hanging out because there's really not a whole lot else to do here, folks. But I know you need me here. I know you do because there's only one way to stay on the right side of the markets, and that is to follow the stock market network stream every day that I'm actually here. That might be more of the problem, is actually getting here. But when we're here, we gotcha. Again, so really all we're doing is just kind of, must be. No, yeah, I was like, I ain't right. All right. So now what we're doing is we're watching the breakdown on the SPY. What? No. Wrong candle. Yeah, market internals for everything's still going down. Nothing really looks good in the market, so you just got to assume, probably down. Huh. Let's take a look at the range. All right. Well, that's been fun. Looks like the market's kind of maybe trying to bounce, but probably not. I mean, if it does, it's just going to go back to the 50 SMA. That's all it's doing for the moment. All right, so like, again, this is, again, pretty common, guys, what you're seeing, right? So what we just pretty much witnessed so far is a a break of the 50 SMA, right, down, and then all we're seeing is just the market, instead of just breaking down that SMA calculation and going down right away, you're starting to bounce, right, a little bit. And where you're going right back to the 50 SMA, right? So you got to think of it like the market was all the way up here, sold all the way to the 50 SMA, then it tried to get below. Is it really just going to break down and keep going without attempting to back test it in some fashion, right? And then if it's going to turn into a really good long, it's got to reclaim. Otherwise, this is just a back test and then kind of continue down. So again, like I said, if we go to the 30-minute time frame, so you can actually see really what it looks like, it's just that, right? So what has the market done today? The market has pulled back to the SMA, essentially, and it's just not breaking down. It's just holding for the moment, right? So that's really all we've done. And ultimately, what else is happening? If we pull the volatility market back, right? So what do we talk about too? It's up to the volatility index, right? The volatility index, needs to keep breaking out, or needs to break out. Otherwise, this is just what? It's a long move into the 30-minute VIX, and then it's a rejection, right? And then what's that going to be? That's going to be a 10-day, 30-minute, just look at it, it's right there, clear as day. So what are we doing? We are broken down in the volatility market, and we are back testing. We are not above, so this can still just be resistance and volatility staying in a downtrend. And as a result, what happens to your market? Your market gets supported. So currently the low of day here, I would say, was because, a lot of which is because of the top getting put in the volatility market there. So yeah, it's pretty much that. supposed to throw on open high level close on that one too. So again, remember guys, the NASDAQ, remember we were talking about how the NASDAQ broke down here. So again, the market on the NASDAQ is still just bearish because it's just below that trend. Again, unless the NASDAQ is above this trend, we're probably not going to see any sort of bounce that's extremely meaningful because that's just the current intraday selling trend to the downside. Let's see, gold is doing pretty much the same thing there. It's actually a little over any of the GPU day. Interesting. So. Well, market's kind of coming back. Market's coming back, ladies and gentlemen. So, again, really the objective here now for everyone, you know, again, the SMA is flat and sideways. It's not generally the best, but just in general for short-term trading and whatnot, now you're looking for whether or not market is going to establish back above the SMA calculation of 692.90 or not. And if it does, then we could see a little bit of a bounce, you know, kind of into tomorrow, something like that. But that's pretty much it. You're just always looking for the direction off and around that 50 SMA, right? So this morning we pulled markets down. We went a little below. Now we've back tested. Now we got to give the market time to digest and decide if it's going to turn into a breakdown or if we're going to basically continue the rally. Remember, the SMA calculation is always the start of a bearish and bullish move, right? So that being said, now that we're back over the SMA, we're kind of on that bullish side, and now as long as it maintains over the SMA, things are fine, you know? So anyways, that being said, that was a good day, and I will catch you guys back tomorrow, as long as the work in the house isn't too bad. Today it's not, obviously, but if it gets louder and nailers are going, we might not be able to stream. But anyways, cheers, have a good one, and we'll catch you back tomorrow, hopefully.